Welcome to the show. You want to make real money in the market? Then learn the language of Wall Street. Think of market indicators as your dashboard. They help you make smart decisions, just like a car's speedometer or gas gauge. Market indicators are your secret weapon. They turn noise into actionable insights. Some indicators predict the future, while others confirm trends. You need both to build a complete picture. Don't be intimidated by fancy names. We'll break it down. My goal is to make you a more informed investor. This isn't for the timid. It's for those ready to take control of their financial destiny. Learning to read these signals is the difference between being a spectator and a player. So grab a notebook and let's get down to business. Let's start with the basics: price and volume. Price is what you pay for a share, but it doesn't tell the whole story. Volume, the number of shares traded, shows conviction behind price moves. A big price move on high volume is a shout. Moving averages smooth out chaotic price action, revealing trends. The 50-day and 200-day SMAs are key. Above them, the trend is up. Below, it's down. The EMA reacts faster to new information. Traders use moving average crossovers as signals. A golden cross is bullish, a death cross is bearish. Price tells you what's happening, volume tells you how much it matters, and moving averages show the trend. These indicators work together like a championship team. You're reading the market's story, not just looking at lines. Now let's talk momentum with RSI and MACD. RSI measures speed and change of price movements. Above 70, a stock is overbought. Below 30, it's oversold. These are warning lights, not stop signs. A strong stock can stay overbought in an uptrend. Bearish divergence is a red flag. MACD reveals changes in trend strength and momentum. A bullish MACD crossover suggests momentum is shifting up. The histogram shows momentum acceleration or deceleration. Use MACD to confirm trends seen with moving averages. A bullish MACD crossover with a stock above its 50-day average is a high probability setup. RSI and MACD together are a 1-2 punch for timing entries and exits. They help you understand momentum shifts. You're stacking the odds in your favor. These tools are essential for smart trading. Let's talk volatility with Bollinger Bands. They act like rubber bands around the price. Wide bands mean high volatility. Squeezed bands mean low volatility. The squeeze signals a big move could be coming. Price walking the band shows strength. A sharp move outside suggests a snapback. Now, support and resistance. The market's floors and ceilings. Support is where buyers step in. Resistance is where sellers push back. These levels are created by past price action. Old highs become resistance. Old lows become support. Psychology plays a big role here. A breakout through resistance on high volume is significant. The old ceiling becomes the new floor. Identifying these levels is crucial for entry and exit points. They show where bulls and bears battle. You're using a roadmap for potential trades. These concepts are fundamental to technical analysis. Great stocks can't fight a sick market. Market breadth shows how many stocks are in a move. The advanced decline line reveals market strength. Confirmation is key. Divergence is a warning. New highs versus new lows indicate market health. The VIX measures fear. High VIX means high fear. A rising VIX suggests falling stock prices. But a VIX spike can signal a market bottom. It's often a contrarian indicator. When the VIX is high, it's time to buy. These tools help you gauge market sentiment. You're understanding the market's emotional state. Use them to navigate market conditions. Technical indicators are only half the story. Fundamentals matter too. PE ratio, EPS, and revenue growth are key. PE shows what investors pay for earnings. EPS growth drives stock prices higher. Revenue growth indicates market success. Look at the big economic picture. GDP, unemployment, and inflation affect stocks. Interest rates set by the Fed are crucial. Sentiment indicators measure market mood. Extreme bullishness or bearishness can signal tops or bottoms. Fundamentals and sentiment complete the picture. You're making informed investment decisions. You've got amazing tools. Now combine them. Look for confluence multiple indicators pointing the same way. A strong uptrend, support level, and bullish MACD crossover is a 5-star setup. You're executing a well-thought-out plan. Never rely on a single indicator. Understand each indicator's limitations. Consider the time frame. Align with your trading horizon. Don't force trades. Wait for clear signals. Use stop losses to protect against losses. Fundamentals and market trends matter. Swim with the current, not against it. You're making educated bets, not guesses. This checklist keeps you out of trouble. You're trading with confidence and strategy. You've learned powerful indicators. Now practice. Open a stock chart and add indicators. Observe how they move with price. Look for patterns, rallies, crashes, crossovers. It's like learning a new language. Practice makes patterns clear. Be patient. Mastery takes time. Keep a trading journal to learn from mistakes. Education never stops. Stay curious. Follow smart people, but do your own homework. The market evolves, so should you. You're ahead of most by learning these concepts. Take control of your financial future. You've taken a huge step today. Booyah!